Kia ora everyone, I'm Mary Jo, Kiwibank economist. So the latest surveys show that business confidence has improved. Fewer firms expect economic conditions to deteriorate in the coming months, and more firms expect trading activity to remain strong. Household confidence has also improved, with spending behaviour maintaining momentum since coming out of lockdown. Now, much of this renewed optimism is based on the fact that we've been able to keep COVID well managed. So this latest community case is a timely reminder of the world we live in, and that the threat of another COVID outbreak is always looming. Now, the CPI report we got last week showed that inflation was much stronger than expected. The headline print came out well above consensus at 0.5%, leaving annual inflation unchanged at 1.4%. A rapid recovery in domestic demand and severe supply constraints were the two main factors driving prices higher. Domestic accommodation prices for things like local motels and Airbnbs were notably high, rising 20% in the quarter, so all that heavy discounting we saw during winter was unwound in summer. And the goods like used cars were more expensive than usual because of a lack of supply. Now, looking ahead, these cost pressures should dissipate and inflation should ease slightly before strengthening into 2022. Now, with the way that demand has recovered, the risks of deflation have certainly receded. Even if we strip away any volatility in price changes, the core inflation measures for the fourth quarter were still solid, sitting around that target 2% mark. So what does this all mean for the Reserve Bank and monetary policy? Well, the Reserve Bank's dual mandates are still far from being met, but the rampant run in the housing market does take a negative official cash rate off the table. We now expect the Reserve Bank to keep the OCR unchanged at 0.25% well into next year. Now, what the Reserve Bank could do to try and cool the housing market is look into macroprudential tools, looking into repricing credit risks for different mortgage rates, but really the focus should be on housing supply, and that's more of a job for the government. More resources need to be channeled into housing development and unlocking land. That's it for this weekly wrap. I'll talk to you in the next one.